Hey everybody, it's Pete Renzulli. Welcome to Stock Trading Pro. In today's Stock Market Live, we're going to take a look at Apple stock, something we haven't done in a long time. I feel like the stock has been downtrending for a while, and it actually has, but something really important happened in Apple stock where it broke a 3-month downtrend. But I want to talk about something today that's even more important. Some of you know that I've been trading since 2000, April 17th of 2000, actually. And back in the day, we were mostly trading NASDAQ stocks, and there was something known as an indicator stock. And believe it or not, back then, the big indicator stock when you're trading NASDAQ was Cisco. And pretty much when you were trading Cisco, Cisco actually moved a full 90 seconds before the other stocks moved, and even before the stock futures moved. That's how much of a dominant force that Cisco stock was on the stock market back then, especially just coming out of the internet boom, the dot-com boom. So what does that have to do with today? What does that have to do with Apple stock? We're talking about day trading right now, obviously, if we're talking about a 90-second window. But think about how massive that is. And if you're looking at a stock, that stock moves first, and then all the other stocks in that sector move, including the market and mostly NASDAQ stocks. 90 seconds later, it was a gigantic trading edge. Now, the reason I'm bringing it up is that Apple stock, which broke the 3-month downtrend, we'll actually put this into the screen right here. Let me just pull that up. Got to share it. And I want to point out what's going on and why it's so significant. We were talking about this all day yesterday. You can see it finally broke the downtrend. It's had four days of buying after this bottoming tail here, right? So what does that have to do with it? And I want to give you a heads up because we talk about our research every day. I put the research out every morning. I try and give everybody here on YouTube as much heads up on what I'm looking to trade during the day. Apple is not quite the same as what Cisco did back in the day. I remember somebody actually saying to me that if Cisco goes down, the market's going to crash. That's how big. Just that one stock had that much influence on the market. All day long yesterday, I was kind of pounding on the table yesterday. As long as Apple continues to do X, Y, and Z, today is going to be an absolutely amazing day of day trading. And we're going to kind of translate that over into swing trade ideas and why today, with the jobs number coming out today, why today is not a good day to put on a new swing trade. And we're going to be looking to put on a new swing trade probably like next Tuesday or Wednesday on the bullish side of things if the market unfolds the way we want. So we have a lot of stuff to uncover today. I'm actually going to talk about this book today. We got a lot of questions about the bookshelf. Stick around. We got a ton of actionable stuff that I can't wait to share with you today. So I'll be back in just 1 second. Okay, so thank you so much for being here to me, everybody. If you do me a favor, just say hello. I'd love to hear from everybody. We got a bunch of people. Just got a nice comment about our options program that just started. Options course. Thank you so much for that. Last night was 2 hours on the Greeks. It was awesome. If you happen to be in the program with us right now, the updated and edited videos are inside of your education portal. So one of the questions that we get, I'm actually going to answer 2 questions from people that are here on YouTube, left comments, and Juan and Pedro, I believe it is. We're going to take a look at that in a second. But I want to talk about Apple. And I want to talk about the fact that we all know that, especially if you've been a part of our channel, you understand that a monster part of trading success is not just, am I buying at the right time? There's a big part of trading that is also, what are the probabilities of my target being hit? So we all understand risk reward. We all understand putting on the trade. We understand a stop loss before we buy that stock. We do all that stock research and we're looking for the best stocks to buy now. We want to buy that stock, and that's fantastic, right? And you understand where you're going to get out of the trade, but there's the next component of it because everybody understands risk reward, right? I'm going to risk 1 to make 3. Like that's the classic trading maxim, right? But what are the odds of making the 3 before you get stopped out? That's where order flow and tape reading comes into the equation. So we're going to use Apple as an example right now. If you could just do me a favor, if you happen to be new to the channel, and I want to earn it, if we provide some value for you, if you could please do me a favor, by the time we're done, hit that subscribe button and give us a like if I provide value. I want to earn it from you today, okay? So we're going to hop on over to Apple. We're going to take a look at the chart, okay? We're going to hop on over here, and we see that it broke the downtrend. Now, one of the biggest things to consider, and we're going to go over into our research document again. So here's the rotation heading into the day, and you could clearly see that yesterday was just an absolutely Fantastic, fantastic day of trading. But the part that I want to work over is all the way over here. So you see when we look at the stocks in play, and I'm going to zoom this in a little bit for you. And this is a part of really understanding how to become a consistent trader. And I'm actually just going to throw it out there right now, which actually be kind of cool. How many people right now would feel pretty good if you could just make an extra $4,000 to $6,000 from the stock market every month? Pretty much everybody who reaches out to us and becomes a part of our community, do me a favor, type in the chat if you believe that would be kind of life-changing, being able to earn that extra $4,000 to $6,000 a month. Maybe you keep your full-time income, but $4,000 to $6,000, that would be pretty awesome for a lot of people. And that's anywhere between $50,000 and an extra $75,000 a year. I don't know about you, but I'd like to go golfing. So what we do is we want to set up ourselves to have predictability in how we go after that $4,000 to $6,000 per month. Now, here's one of the biggest things. This is all tying back to Apple stock and why Apple stock was dominating the stock market and why it was such a no-brainer opportunity yesterday. And quite frankly, the last 4 days where the market hasn't really gone down, but yesterday specifically, for those of you that are day trading stocks, watch this on the research document that we put out every day. So part of what we do, and again, just as an aside, this is kind of a sneak peek into the research that we have for today. So I just want to give you an idea of what we do and what I provide the research for everybody. So you're gonna get a sneak peek on today's research. So you might want to screenshot that. I'm giving you a heads up on that, right? So people have paid for this, but you can take a screenshot. So right here, right? So this is the order flow for the month, the week, and the momentum. But this is the part that I want you to take a look at over here is the Dow Jones, the QQQ, and the S&P 500. These are the top 25 holdings in each of those. So what we're essentially looking at is that if we're looking at the market, we're looking at the Dow, we're looking at the S&P, we're looking at the NASDAQ, why are they moving, right? Why do stocks move up and down? And specifically indexes. Why do those indexes move up and down? Now take a look at this chart right here, this research doc. Dow Jones, Apple. NASDAQ, Apple. S&P 500, Apple. You start to put these clues together where if you understand which stocks are the dominant stocks, everybody has heard of the FANG stocks, right? It used to be Facebook. There's Facebook, Apple, Netflix, which is kind of in the crapper now, and Google, right? Apple is the dominant force in the three major sectors that we watch. We call them the big three. And where's John A here? Yeah, John A is here all the time. John, I appreciate you being here with us in your comments every day. John posts a lot of stuff here on our YouTube channel. We're talking about the big three, and that's the right place to start. What is the NASDAQ doing? What is the Dow doing? What is the S&P doing? But when you go a little bit deeper, you have to start asking yourself some better questions on why are those indices going up. I'm going to touch on Apple stock on a 5-minute chart in just 1 second. When you start to understand why those indices might be moving, the natural thing is you need to have a list of the dominant stocks that move those indices. So I'm going to give you like a little bit of an advanced stock trading lesson right now. You need to take those stocks that are the top holdings in those groups, and specifically if we're looking at the S&P 500, which is where I spend a lot of my day, that has to be in a watch list by itself. So what I'm basically saying is we're stacking the reasons that we should be placing a trade, and we're stacking the reasons why we would expect our profit target to be hit as opposed to our stop loss. So Apple kind of took me back to my old days of early NASDAQ trading. We're like, wow, it's such a dominant force in the market right now. And Apple literally was lifting the market for the last 4 days and yesterday in a really, really big way. So what I'm going to do now is we're going to walk on over to the Apple stock 5-minute chart. And I want you to take a snapshot of this. I really want to give you this visualization because there's certain things that you absolutely need to be able to spot while they're happening. And that's actually going to take us into one of the questions that we're going to have over here. We actually have two of them. And one of them over here is from Pedro. We're going to talk about some chart work. Okay. So I'm going to pull up the chart of Apple, and we're going to specifically look at it on a 5-minute chart. So you can obviously see what's going on in the chart here. Now, when I start to pull this up and we're looking at it, I want you to take a snapshot of it because it's that significance. During the day, there are certain things that day traders should be looking at. And this also applies to people swing trading stocks. You need to create certain criteria, certain parameters that tell you, okay, it's obvious or it's not. And something I want you to write down, which is critically important, is if you're overwhelmed right now, if the stock market makes you feel like you have no idea what you're looking at from one day to the next, but maybe last year you were making money in stocks, this year you can't find your way. You need to know exactly what you're looking for. And I know I know that sounds simple, right? But, okay, if you feel confused, that means you are looking for everything as opposed to something. So when we bring that all the way back into Apple from yesterday, and why yesterday, which you'll hear me talk about in our community, when the day is unfolding in a way that's just absolutely amazing, you will hear me say on our microphone, and I'll pull the microphone in for a dramatic effect here. You'll hear me say, okay, everybody, belly up to the bar. We have a ton of stuff going on right now. You want to sit at your seat right now. Shut up your cell phone, put it on airplane mode, turn off anything you're watching on television. There's money to be made right now because of X, Y, and Z. I do that all day, every day, because I want the members of our community to understand that there's certain pockets of opportunity. So I'll say, belly up to the bar. There's something going on right now that you need to pay attention to. So I'm going to show you the one example in Apple right now where yesterday, for the entire day, all we kept saying was, as long as this is still valid, you should be looking for spots to buy and buy with conviction. And yesterday was that kind of day where so many stocks, not only NASDAQ stocks, followed through, the whole market followed through. But I want to say this super clear right now. This is 4 days later, okay? 4 days into the rally. Today is not a day that I'd be putting on a new swing trade. I'd be looking maybe for one more final day of buying. Then I'm going to be looking for a pause. But let's get over to the Apple chart first. So obviously we could take a look at it and see where it traded, right? So one of the big levels that we keep an eye on during the day, which is a monster part of reading the stock, is where did it open today? So if you think about the way that we look at stocks and why we put on stocks in the first place, we have to be buying stocks because somebody with deep pockets is actually spending money. That's the reason you see the charts with higher highs, higher lows, big green candles. Somebody with a lot of money is spending money. Actually, I want to say hello to somebody. William, haven't spoke to you in a while. I know that you had some surgery. I just want to make sure that you're feeling better. Send me an email. Let me know. I hope that you're doing better today, pal. So anyway, the reason that we buy these stocks is because somebody else with deep pockets is moving them. So you need a reference point, whether it's a day trade, a swing trade, a position trade. This is kind of an advanced thing, but it's something you need to know. For us as day traders, for me, I was taught way back in the day, the foundational element of tape reading is whether or not something is moving closer to or further away from a significant price. Now, most of us use our entry price to know how strong or weak a stock is because nobody knows that stock better than you because you're in it. The trick with tape reading before you're in the position is to have a price level that matters. You could use the previous day's close and just say, is it positive or negative? That's okay. But there is a gigantic flaw with that, especially if we're talking about day trading stocks. How many times have you seen a stock where maybe it gapped higher and it's up $4, but today it's actually down $2? So think about it. Raise your hand if you've ever been in go into the day as a day trader specifically. It applies to swing trading stocks as well, where you can't wait to buy it. You get in there and buy it, but the whole time that you're buying it, it's going down. And you're like, I don't understand. The stock's up $4, but it keeps going down. What the heck am I doing wrong? This is what you want to start using as a day trader, okay? You need to have the open price of the day mapped out. Absolutely a must, because here's the language that you want to use. You want to say, we know we want to be a buyer of a certain stock because over the last certain amount of days, weeks, or months, somebody with deep pockets is pushing that stock up. That's great. That's the first reason we want to be a buyer. But I want to get this across by a mile, which is why I'm talking about Apple today and why it's not a new swing trade today or any of the swing trades for me today that have moved over the last 4 days. By a mile, the biggest challenge that people have is timing into the trade. But more importantly, and I'm going to throw this out there as a challenge to everybody watching this video right now, do you have a structure, repeatable, predictable way, definitive way of saying This has changed. I'm going to tell you straight up right now, most of the people that come into our community, pretty good at picking ideas, but do not have a process for understanding when that idea has changed. So if you are day trading stocks, the open price, boom, the market opens at 9:30. You'll see every single chart, open price. What's a simple way of doing that? Is your daily chart green? That's it. That's where it's trading from today's open price. So you'll see plenty of stocks open higher, but then slowly trade down the rest of the day. It might be up $3 from yesterday, but down $2 from today's opening price. That's the first part of stacking, watching Apple yesterday, and why I was, again, belly up to the bar. There's stuff to do today. There's certain moments where you have to put your cell phone on airplane mode. There's money to be made right now. And the whole market yesterday, we're going to talk about AMC in a second. I saw somebody talk about that. So if we hop on over, that's the first one. The second one, which is a pretty big one, is what is known as volume weighted average price. And again, I'm not telling you anything. It's not like a secret. Everybody knows about volume weighted average price, also known as VWAP. If you've never used VWAP, I only use it on the day trading side of things. If you've used VWAP, it's essentially the volume. So if you could visualize a moving average, right? If you look at a move, and let's actually put that up on the chart. So if you could visualize a moving average, and let's just say for argument's sake, we put the 50-period moving average on this chart. So that's the 50-period moving average of Apple. We all know that moving averages, essentially what they do is they take the closing price, and let's say it's a 50-period moving average, and it averages the closes over the last 50 or the last 20, whatever moving average, and then they basically kind of connect the dots for the averages. That's just price action. Volume weighted average price takes it to a whole different level. And again, this isn't a secret. I'm just telling you how I use it. Volume weighted average price now adds into that the volume traded and gives you the trend. So essentially, it's connecting the dots of where the most volume traded for that stock. So if that volume weighted average price is trending and your stock is above that, that's a pretty significant sign that you should be looking for entries and risk reward that makes sense in that stock. Now, that's the day trading side of things. We obviously want to stack on top of that. That's what we do. Stack the order flow on top of that. The very minimal criteria for stacking the order flow would be today's opening price. And then you also go over to yesterday. Are we seeing smart money from one day to the next buying that stock? We want some sort of minimum criteria that tells us right now I should be looking to be a buyer of that stock. So if we zip all the way back now and we put all those pieces together, we're actually going to start on the daily chart. So let me actually pull up the daily chart here. I'm going to remove these signals, and I want to help you because then we're going to answer two questions. So if we go over to Apple on the daily chart and we look over here, the minimum criteria is we are seeing smart money came back and created this bottoming tail. Then we actually watched higher highs, higher lows. So from one day to the next, buyers came in, paid higher prices, held the bid, paid higher prices, held the bid, higher prices, held the bid, right? So what do we have there? We have some validation. We have some validation that if this is happening and this happens intraday, then I'm going to be a buyer. And I'm going to be a buyer with conviction as long as that's still valid. So if we first go to yesterday, and then now we're going to look at how we're going to look at Apple stock today, we're going to put all these pieces together. So you're buying if that scenario is still valid, which is kind of cool, right? So now if we work our way over into the day trading chart again, and again, this is Apple from yesterday, and we know we have that opening price. And if we look at volume weighted average price, as I just explained it, this moment right here at 11:35 was the only time the entire day, that Apple went below VWAP, volume weighted average price. The rest of the day showed tremendous buying pressure. So you had today's buying pressure, yesterday's buying pressure, the last 4 days buying pressure, all stacking the reasons for us to be looking for Apple. And quite frankly, going back to what I showed you before, and if we go back over to that again into the research document, we can see Apple strength over the last 4 days carried the market. So what does that mean for looking at Apple stock today, and how do I plan on trading it going into the day? Well, we just mapped out volume weighted average price. We just mapped out the opening price. And we know that the last 4 days of Apple have been very strong and it kind of lifted the market. But here's the thing. Apple just broke the downtrend. And if we go back over there, Apple on the daily chart just broke this downtrend. But now I'm going back to what we were talking about before with risk reward. The stock has now rallied for 5 days, really, if you count from here to here, but really pretty much 4 days. So now we actually have resistance. This is where sellers came in and smashed the stock down, which is not that much higher. Plus, we have the stock has now rallied for the last 4 days in the context of this bigger move to the downside. That's a mouthful, right? But it's really not. Let's just break this down together so that trading becomes really simple for you so it's repeatable. What are the odds if I buy this stock of my profit target being hit to justify the risk? So now Apple's already gone up 4 days in a row. There's a resistance, which is where sellers did something significant, not too far ahead of where we are right now. And the market's also in a bigger picture move to the downside. So are we trading with the big picture right now? The answer is no. Was the last 4 days fantastic? The answer is yes, and we traded it aggressively. But right now, we're talking about a swing trade. We're going to talk about two different ways of looking at Apple right now. If we're looking at a swing trade and we know we have that resistance just above where we are right now, which is right here compared to where we are, is it worth it? And I'll throw this question out to everybody. Is it worth it taking risk or accepting risk on a trade, a swing trade in Apple stock right now, when we've already gone up basically 5 days in a row, if you count that bottoming tail, and there's a wall of resistance just above, which is where sellers did something significant last time? The answer is no. I'm not looking for a new swing trade in Apple right now until it gets beyond this level and pauses. So just to map out the price that we're talking about here, which is 148 in that area. So what does that mean for Apple stock today, and how do I plan to trade it? So if we go back over to where it is right now, which is, let's just say 145.75, and we know this resistance is roughly $3 higher from that. So that means that if Apple meets the same criteria today, after the market opens today. So remember what we're doing right now, because I'm going to get into some of the questions that people had before, and they're really relevant to what we're talking about right now, right? We just mapped out what we plan to do in Apple as a next swing trade. So what's kind of cool about this now is there's no stress on the next swing trade. I know it doesn't make sense to put on a new swing trade now unless it gets beyond that level where the reward potential becomes likely and it's worth it. So a new swing trade right now for me is not worth it because there's only $3. So does that mean that Apple is off the table for me? No, not from a day trading perspective. If Apple stock does the same thing that it did yesterday, which meets that criteria that I just gave you, and if you missed it, just go back to that part in the video. If it meets the same criteria, there's $3 profit potential up to that big wall of sellers around 148 in that area. So that could be worth it as a day trade, but only if it meets the same criteria that I just taught you. So this is kind of cool. So think about how much stress gets removed from your trading. We just mapped out two different trades in Apple before the market even opens. We know exactly what we're looking for on a swing trade. We know exactly what needs to happen after the market opens today for a day trade. So what does that mean? That means the market opens, have a fresh cup of coffee, and the whole community is just waiting for those things to unfold. So that's just one trade. I do this all day, every day. I'm giving everybody like the crazy stuff that's going on in my head, and I'm walking everybody in our community through. If this happens, then we plan to do this. If the market does this, if the market internals do this, if these three stocks do this, then we're going to start to look to be a buyer or a short seller if they happen to be going down. If you are struggling in your trading right now, if the stock market's frustrating you, driving you crazy, you just need to do one thing different. And that one thing is just think through, if this happens, then what do I do? So many people just look for ideas and say, I just want to be a buyer. And they buy because they saw a news. So let's actually carry that over into Tesla right now. So Tesla and a lot of the Chinese electric vehicle stocks are actually flying right now simply because the Chinese government is easing the restrictions. So we've seen NIO, XPEV, LI, and Tesla. So if we take a look at the short-term chart of those guys, and let's start out with Tesla stock. Tesla over the last week or so has rallied. But again, if you remember what we talked about the other day, Tesla's still kind of stuck in this box right now where I am not really having a longer term perspective on this stock. It's got to get out of this window. If we take a look at NEO has gone well bid, down a little bit today. If we take a look at LI, they just came out with a secondary offering. Again, one thing I want to talk about here as well, if you happen to be in my universe, you happen to have gone through a boot camp, maybe you're in Order Flow Pro with me, you know that the big thing with which stocks I like to trade stocks that have smart money attention. I want to trade stocks that have institutional attention. The smart money is moving those stocks, but more importantly, I want to see energy. I want to see energy where it opens near the low, closes near the high, 6.5 hours worth of buying. Those are the stocks that I want to be near. When a stock goes like this and opens and closes in the same spot, that's indecision. Nothing really changed in that stock, so that's not going to have my attention. Write this down. If the stock does not have smart money attention, why would I give it my attention? If a stock does have smart money attention, how do I see that? Big green and big red candles consistently. Obviously, want to be a buyer, right? If they're big green candles. So take a look at this stock and tell me if you think, based on what I just said, indecision versus energy, what does it have most of the time? Look at all of this indecision. How many of these are we seeing? One every week and a half, maybe? Look at all of this indecision. Now, you could definitely say it's been going higher. What we're talking about right now are finding opportunities that are predictable because smart money is paying attention to those stocks on a regular basis. So you'll never look at stock charts again the same way, because what we're talking about right now is smart money moves stocks up and down. If we understand how to track the order flow of those smart money moves, the smart money footprints that we call it, that kind of makes trading a little bit easier. But here's where I want to get into now. Okay, this is super important. We're going to get to this book in just 1 second, but this is so you see how we kind of just built all the way up to making trading decisions. Now, I want to bring this question in here because it's really important. Okay, and this question was brought up. You can see here Pedro yesterday. How do you deal with ugly charts? Now, we're not going to focus on all the rest of this stuff here because there's a bunch of other questions. How do you deal with ugly charts? Now, based on what we just talked about, right? We talked about probability of the stock moving in our favor. We talked about risk reward. We talked about analyzing and doing technical analysis on Apple stock and breaking down whether or not it's a buying opportunity as a day trade, what fantastic opportunities look like in that stock from a day trading perspective, what we'd look for the next swing trade in Apple stock. We have that all mapped out, right? And in those conditions, it looks pretty good, right? But what do you do in a trade? And let's go back to this really quick. What do you do with ugly charts? Right. So the reason, and by the way, Pedro, thank you for that question. I'm a Pedro as well. If you are looking at a chart, and we just said we built all this conversation around what perfect needs to look like. If you understand what perfect looks like, the further you move away from perfect, and Pedro's question is, how do you deal with ugly charts? You don't. That's the point. That's where traders struggle. You choose to trade when it looks crappy anyway. I can't say this any other way. If you choose to focus on ugly charts and try and find an idea, you are literally trading when there's no smart money attention. Because if smart money was paying attention to that and committing capital, we would see those big green energy candles on a regular basis. We would see a beautiful uptrending move in that direction, and then we'd be looking for a spot to get involved. So Pedro, okay, how do you deal with ugly charts? You don't call them back. We've all been on crazy dates before. We've all been with people that were like, oh my God, there's so many red flags with this person. What am I doing? You don't. You don't deal with ugly charts. That's the entire point of trading. If it's hard to find, it's not there. If you know what you're looking for, you're never lost again. So if you look at a chart, I can't believe I tied this together like this because it just worked out this way. If you look at a chart and you literally say, I don't see anything, and still trade it, shame on you. If you look at a chart and you say, I don't see anything, and you stop yourself, you are instantly starting to move closer to trading profitability. Now, here's the book I want to give you. I don't know if anybody's ever seen this book before. The 5-second rule. You can see the author here, Mel Robbins. This book is very relevant to what we're talking about right now. And essentially, the book says you want to make a decision, make that decision before 5 seconds is up. Do not overthink it. Do not get analysis paralysis and think way too hard. If you know what great trades look like, it should be like that. You'll be able to tell in a heartbeat. You'll be able to tell this stock is amazing. So let's actually go back to Tesla for a second and pull that chart back up and go right there. So if we take a look at this chart right now of Tesla, oh, I'm sorry, let me pull it up. If we pull up and take a look at this chart of Tesla right now, quick answer within 5 seconds. And do me a favor, put that in the chat, okay? Can you look at this chart of Tesla? I'm going to pull it back up one more time. Are buyers or sellers in charge of that stock right now? Buyers, sellers, or nobody? What would you say right now? Can you look at that chart really quickly within 5 seconds and say buyers or sellers, who's in charge of that stock right now? Buyers or sellers or nobody? Nobody. Other than the last couple of days, the stock is stuck for 2 months. It's going sideways for 2 months. Maybe some shorter time frame. You could go down to shorter time frames, but from one day to the next, 1 week to the next, there is no bias. Within 5 seconds, you should be able to make that answer for every single idea you're talking about. And if you can't, that simply means that your strategy for how you determine whether or not a stock is really obvious and the right time to buy that stock, you did all that work looking for the best stocks to buy now. If you can't answer it quickly, yes, this is fantastic. Buyers are definitely in charge of this thing right now. I just need to find a spot where risk reward makes sense. If you can't do it with that much conviction, don't take the trade, because then what you're going to do is you're going to try and talk yourself into buying that and then hoping it does what you want it to do, as opposed to the way that we do things, which is stacking the order flow and tape reading. It's already doing what we want. Then we're just looking for a spot to hop on board. It's so much easier to have all that stress taken out of your life by saying, there's no hoping. It is or it isn't. And I don't want to sound like Yoda right now. There is no think, only do, or whatever he says. Please watch that part of the video again. It will save you all of the gray hair that I have right now, because I didn't understand that when I first started trading. Is it obvious? That is the number one thing. So I want to bring up another question that I think was a pretty darn good one. And we're going to take a look at Juan's question, okay? I want to have an edge and have a routine, a checklist to follow. I feel like I don't know what to do when I'm in front of the charts. So this is very important and kind of a super, it's not really advanced, but I just want to pull it back up on it, okay? I feel like I don't know what to do when I'm in front of the charts. And I'm actually going to tie this back to a big problem that a lot of traders have when they first come into our community, is that I know what I'm looking at, but I can't make money. I know what I'm looking at, but again, the same way that Juan says it here, but I don't know what to do when I'm in front of the charts. I'm going to fix that for you right now. So if you feel like right now you're not getting good entries, you feel like the stock moves before, like it already moved and now I'm missing I'm not getting good entry, right? You need to constantly, and I don't care if you're day trading stocks or swing trading stocks, you need to be going through your list of stocks that you trade. It could be just the 30 stocks in the Dow, could be just a list of 5 to 7 stocks, whatever it happens to be, right? And Tom, by the way, this is awesome. I love that. Always half full. I'm with you on that one, Tom. I 100%. You need to be saying all the time that you're thinking about making a trading decision. If this happens, then what do I do? If this happens, then what do I do? If the market continues to the upside, which stocks are the best opportunities? If the market continues to the upside, which stocks happen to be weak? In case the market reverses, I want to have a list of those stocks before the market goes down. So when you're in front of the charts and you're doing technical analysis and you're looking for ideas, you need to be saying to yourself these things. If this happens, then what do I do? If this happens, then what do I do? But you need to be working the keyboard. You'll hear me saying that all the time. Again, I'll joke around a little bit, but this is what I do during the day. Everybody should be working the keyboard because there's plenty of things to do right now. Work your list. There's opportunity right now. All day long, you have to be doing that. You have to. I want to give you a big one because this is the one from right now that's relevant. The market's gone up the last 4 or 5 days. It's been frustrating short sellers out of their mind. So what you need to be doing, let's say, for example, and let's walk through this as a team here together. If the market goes down today and that longer term move to the downside starts to follow through again, if the market goes down today, Then I need to have a list of stocks that I plan to short sell. You don't look for them after the fact. You don't look for them later. You need to have them now. If the market goes up, which stocks am I buying? If the market goes down, which stocks am I short selling? If the market goes up and my stocks that I want to buy are going down, then I plan to leave them alone. This is where trading becomes so much less stressful, and you're not panicking anymore. You're not, oh my God, I got to find something to do. Why is there news on that stock? That's not professional trading. The way that we do it, we have our game plan before the market even opens, before the week even starts. We have our swing trading session on Sunday for the week. We're mapping out what we expect to have happen during the week. Now, you might be saying, well, nobody can predict the week. I tend to agree with you, but we can absolutely stack the reasons that we think something would happen. Now, here's the thing. If we list out 5 things that we expect to have happen today, or 5 things that we expect to have happen this week, if only one of the 5 does exactly what we mapped out, that's a pretty darn good way to make a living. I want to leave you with that. That's really something important. I want to challenge you. Have the guts to put together an argument for a trade. And then if what you expect to have happen follows through perfectly, have the guts to get in there and be successful. It's when you're not prepared that you feel confused. The strongest part of trading conviction is because you're ready to make a decision before you need to make that decision. I promise you, the more prepared you are, the better you're going to be expecting to see success in the market. You can't express that strongly enough. It's Friday, quick week. Thank you so much for joining me here today. If you want that list of stocks, you might have to scroll back in the video and attach that big list, because we just said that the market, if it goes down today, you already need to have a list of stocks that you're planning to sell short. If you understand the other side of the market, go back to that list, because we gave you a big list of stocks on the other side. So if we provided some value for you today, please do me a favor, hit that subscribe button. And if we did a good job, hit that like button, because it'll let me know that this is the kind of content that you really like watching. So thank you so much for joining me here today, everybody. I really, really appreciate it. Go have an awesome day. Have a great weekend, and I'll speak to you soon. Take care now.